Well, good afternoon, everyone, and welcome to our second iteration of the Residential Roundtable. I am Eric Deems. I am the principal broker for Land Advisors Nashville. I am joined by my colleague, George Schubert, and we are excited to be able to spend a little time with you this afternoon talking through um, the year in review, looking back to 2024, and having a 2025 forecast, what we're anticipating um, in the year to come. So we're going to spend the next 10 or so minutes looking to the last 12 months, going through some slides, compiling where we've compiled data, especially in the single family and multifamily space. And then we're going to provide our input and analysis on what we expect in the year ahead. So, a little about Land Advisors for those of you that don't know. Founded in 1987, coming up on 38 years, we have been um, the largest land brokerage company in America for several years now. We opened this office here in Nashville a little over 3 years ago, and we get to serve the entire mid-state. We cover site selection efforts throughout Tennessee, but our primary focus is in that 10 to 12 county region here in Middle Tennessee. We also service landowners and clients up in South Central Kentucky, as well as in Northern Alabama, Huntsville, and that market. Also, part of the Land Advisors umbrella, or within and underneath the umbrella of Land Advisors, is Land Advisors Capital and Launch Development Finance Advisors. For those of you that came to our first residential roundtable in person, we had the folks from Launch there with us, as well as folks from the governor's office speaking about RETA, which is the new legislation that was put in place last year. Our Launch team is working with several in the Nashville market already on some of the bond financing mechanisms that are now available thanks to that legislation. And they work throughout the country on different and various development projects, um, particularly in the what we call the Smile Belt or the Sun Belt region of America. Also, Land Advisors Capital is our capital group that focuses on land and land related capital needs. A lot of times, your local, regionals, or even national banking institutions, finance institutions don't quite understand raw dirt. And so we saw a need there and created a solution. The story of Nashville is really summarized with growth, if we had to put it into one word, right? We have grown by about 82 net new residents a day over the last year, um, and that trend is going to continue. You look to the next 10 years, we're going to have another 320,000 new residents. That's going to require nearly 150,000 new single family and multifamily housing units. And the land consumption required for that is 52,500 acres of land. And for those of us who have been in Nashville for a while, we're used to the growth. We're also realizing that the growing pains are being felt throughout the entire MSA, and those acres are getting harder and harder to come by. Okay, George, you want to speak to the population growth here in Middle Tennessee?
So since 2000, Tennessee has been really punching double its weight. We account for a little over 2% of the U.S. population growth, or over 2% of the U.S. population, but we're responsible for double that. If you look at the percentage of population growth that Tennessee in migration represents. I'd encourage anybody on this call to go look at the delta between any pair city in New York, California, or Illinois on U-Haul's website, and the very expensive cost to drop a U-Haul off here, but the dirt cheap cost to rent one and move out. If this chart was expressed as a percentage, we would be giving Texas a run for their money versus just the gross number of people moving here. And moving on to the next slide, Um, you know, Nashville population growth has been pretty steady. While the gross number differs every year, we have continually added residents year in and year out, and we don't expect that to slow down in 2025.
Yeah. And as we think about the population change and the growth, a lot of that is driven by the annualized employment change that we've seen. As we say here at Land Advisors, a home is where a job sleeps. And we have had continued growth, positive growth in the job sector since we came out of '08, as you look to the chart here on the screen, with the exception of COVID, which is pretty easy to explain away when you consider that Nashville has a heavy appreciation for tourism, at least from a revenue perspective and a jobs perspective when it comes to hospitality and retail. So we continue to have positive growth amongst our jobs. That is driven by a combination of just good fiscal policy and being one of the cheaper places to live compared to some of our other states in the union. We are one of 7 states that has a 0% income tax. The least taxed state in the union is Tennessee. And furthermore, we have the lowest debt per capita of any other state in the nation, and we still happen to have a surplus. So good leadership at the state level that has been bipartisan over the history of our state and continues to provide opportunity for us and those of us here on this call as we look to the future. Um, Basically, what does this mean? It means that the turbocharged growth in relocations that we've seen, not only in the last year, but really over the last couple of decades, is only going to be increased as we look to the future and as we look to other states doubling down in policies that don't seem to work, and as we continue to double down on policies that do work. Going macro to micro, when you look in particular at the resale home market, the months of supply, if you look there at the screen, you'll see in 2020, um, all of the COVID in migration gobbled up the existing resupply of homes. So, these are what we're hopping on Zillow and checking day in and day out. In 2020, we remember this happening. There was that brief moment where everything seemed to stop, and pretty quickly thereafter, May and beyond, the in-migration was very real. And that continued until you look in mid 22 when the rate hikes began and folks were starting to feel the pressures of those golden handcuffs with those lower interest rates with their mortgages. And so we're just choosing not to sell. Um, Fast forward to most recently, we are starting to see months of resale supply trending backward. Yet again,
And piggybacking on that point, while in the past few years we've had extremely healthy median household income growth, mortgage rates have put a hamper on affordability, and that's a theme that we expect to see continue and has spurred discussions with a lot of local municipalities about housing supply. Um, we have found that the fives and high fives have been palatable to people, but when mortgage rates approach a seven handle is when we start to see the impact in data.
yeah, which we've certainly seen lately.
Furthermore, on that point, with comparatively high rates compared to where we were just 24, 36 months ago, it's very expensive to own a home versus rent. We expect this to change a little bit as apartment supply gets muted and we see more rent growth in that sector. We don't expect this gap to be as wide.
And so looking specifically at new home starts and what we're seeing throughout the Nashville MSA. Annual starts over the trailing 12 months, um, 9,873. Annual closes, 9,138. So the good news is we are starting more than we are selling. And in time, that will help contribute to the deficit that we have throughout the MSA because as of today, we are short about 70,000 total housing units. And you combine that with the nearly 150,000 housing units that we need to keep up with the next 10 years of growth, uh, there's a lot to be said about the need for more and more housing. Permitting speaks to this. George is going to take us through a deeper dive into multifamily specifically in a bit. But I did want to point out if as you look back to 21 and 22, the multifamily, it was the first time multifamily exceeded single family in Middle Tennessee. And so in 2021, multifamily permits were 16,000, while single family was only 14,300. The next year, 2022, multifamily 15,000, single family 16,700. That was a record for the single family permits pulled. And then, of course, as we got into 2023 and into 24, the multifamily supply just shut off because new projects weren't getting kicked off. Multifamily was able to step in, but the interest rate environment has certainly played a part here, as it is oftentimes cheaper for folks to rent than to buy. Uh, George, let's talk a little bit about the new and resale home sales and median prices kind of combined together here.
Well, well, resale, the number of resale homes has always been significantly larger than the number of new home sales. New home sales held pretty steady through this new interest rate environment, while resales got hit pretty hard in this higher priced environment for consumers. Some of that's a function of mortgage rate buydowns by the home builders, but it's a trend worth watching, and we will see what 2025 holds as consumer preferences continue to evolve.
Yeah. And when we talk about median new home price on a per square foot basis, and then on the whole, it's pretty interesting as we look around and look at peer markets. You know, median new home price in this market is $587,000. 6, 7 years ago, that number was in the mid to high 300s. Now, we're not alone in this. Um, when you look at peer cities like Austin, Houston, Charlotte, Orlando, they too have seen an increase, but not to the same level that Nashville has seen on a percentage year over year growth. The other thing to remember too is our resale market has also outperformed all of these other markets. In short, the hyper growth that we've seen has gobbled up existing housing supply, and we just can't build new housing fast enough.
And we go back to Zonda and our top subdivisions that have top ranked subdivisions for absorption. One takeaway that I have from this is largely a function of the size of some of these projects and ability to, to deliver a lot of homes to the market versus a 100 unit project or the likes of such. This also speaks to Middle Tennessee's demand for larger master plans. Consumers are surely enjoying the amenities.
That's right. And so as we kind of wrap up this section, kind of looking back for the single family space, vacant developed lots, VDLs, and the month supply of said VDLs um, can be tricky when you're thinking about Nashville, at least compared to some of our peer markets. Um, it's not shocking or surprising to anybody on this call for sure that the number of builders to developers in this market is certainly outpaced compared to other places. You go to some of your other markets, it's builder, it's developer. In this market, it's builder and it's developer. Um, Many of our national builders, in fact, I think nearly all of them, are having to self-develop um, their own lots, or the super majority of them are having to self-develop 85 to 95% of their own lots. Every builder on this call would love nothing more than to just be able to build the home and do the vertical. So there's a need for increased demand on for developers. So when you look at this chart here that's showing, that we have, a VDL month supply of 15 and a half and roughly 12,600 VDLs in the market. The misleading portion of that is this accounts for the builders who are holding their own uh, VDLs for their future supply. Um, the other thing to keep in mind on this chart is for Nashville, we really need about 3.5 years or 42 months of VDLs to reach equilibrium. We haven't been there at that number since we came out of the 2008 Great Recession. Um, when you look at the market of Nashville, this is the past 12 months closings per active subdivisions. It's that same 1 to 7 when you look at the face of a clock. 1 o'clock being up in Sumner County, 7 o'clock being down in Murray County. We continue to develop in that 1 to 7 following the interstates, or as I like to say, as land brokers, we really chase sewer capacity for a living. And that's where a lot of that is. Thanks to some of the new legislation, sewer alternatives, package systems are becoming more and more of a thing to talk about, step systems, etc. But nothing quite competes yet with sanitary sewer. Furthermore, you look at the lots, starts, and closings. Rutherford County and that I-24 corridor to the southeast continues to be the hottest growth area of the county. But as we begin to look to the next year and even beyond, the question of where is in everybody's mind. All of you that come by the office that we have the pleasure of spending some time with in the conference room, pulling up the big screen, or getting out on a market ride, we're always looking ahead to, yes, this is going to look similar. What will be the same? What will be different? We think the future will certainly look similar, but we're going to have to go maybe a little further out in order to achieve what we're trying to do from a pricing standpoint. Nashville's in growth mode, and because of that, we have we have a lot of demand that needs to be met. No doubt about it. I know I'm preaching to the choir here. But from here, what we'd like to take a minute to do is kind of specifically hone in for the next couple slides on multifamily. And so, George, why don't you just kind of give kind of the quick overview of the multifamily story?
The multifamily story has really been supply, 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 and we built 30,000 units in 30 months. And we would be in a tougher spot had 2024 not been the best absorption year in Nashville's history for apartment move-ins. With 12,000 and change new apartment residents. Um, Looking forward, there's about 9,000 units under construction, and while that absorption helped us, rent growth was pretty muted. Occupancies held steady. And if we even get 75% of that same demand that we had in 24, we're expecting a much more robust multifamily market and some pretty sustained rent growth versus what a lot of the data providers project. So that should lead to a healthier single family market as well.
So we've kind of given the overview looking back of where 2024 and kind of all of the policies, the coming out of COVID, the inflationary moments we've been into, and now we're here in 2025, having a bit of a um, maybe some renewed hope and some optimism looking to the future as we think about what the next year might look like. So, for our forecast, we kind of summarized it in just a handful of things here. One, job growth. Two, the return of multifamily. Three, housing affordability remains top focus. Three, there's evolution among NIMBYs. For those of you that don't know, and I doubt there's anyone, but NIMBY is not in my backyard. These are the folks showing up to oppose the projects that we're trying to get done. And finally, Econ 101, high prices solve high prices. Um, George, let's talk a little bit about kind of what we're seeing on the job front. I mean, Nashville has a lot of things going for it when you think of job growth, right? We have a lot of jobs that have been kind of forecasted and announced that haven't quite taken shape yet. I think of, Oracle's new headquarters in the urban core. I think of Hankook Tire expansion on 24 up towards Clarksville. I think of, um, the stat that is for every one manufacturing job that creates three jobs on the outside of the factory. So, I mean, the job growth continues to be something to be excited about.
I think everybody is additionally moving to number two. I think everybody here today is and all my multifamily developer friends out there are looking forward to a much more normalized multifamily market and not just having continual deliveries on top of them, and looking forward to some healthier rent growth or as much as the consumer can handle.
Yeah, maybe our developers on the call are looking forward to not having to give 3 and 4 months concessions for
Yeah,
their new projects.
definitely
Yeah.
true.
Yeah. And when you think of the multifamily, I mean, you think of it from a timing perspective. Um, we anticipate, I mean, we're already in the last 6 months, we've had more multifamily groups through the office, a lot of which, a lot of groups who are already here, but several who aren't here yet that are starting to come back and starting to kick the tires in Nashville again, if you will. Um, and we've seen that over the last 6 months, just in anticipation of the election change, the administration change, and Tennessee just being a pro-growth, pro-business environment where it's a lot easier to kick off projects. So it's not as easy as it once was, right? We always tell folks, what used to take 7 months now takes 15. I think the other piece to talk about here is housing affordability remains a top focus. I mean, it doesn't matter which submarket we're in, affordability is continually the conversation. It doesn't matter if we're in the urban core of downtown Nashville meeting with hotel developers who want to talk about the affordability of their workers and where are their workers going to live, um, in order to kind of service and take care of these large convention center hotels, the ones who are already here, and then some that are being planned that we're working on today. That's in the urban core. You go out to the deep suburbs, and we're still seeing townhomes starting in the 300s. That's a different environment than either one of us experienced when we first came to this market. Part of the affordability is where I'm a believer that the NIMBYs are going to evolve. I think NIMBYs are always going to be around. Um, I like the term YIMBYs with a Y. Yes, in my backyard. I'm not sure we're going to see complete converts here, but what I mean by evolve, or what we mean by it, as we continue to meet with folks from Murray County to even down into Lewisburg and to the far reaches of our MSA, the complaint of folks is trending from we don't want this here, we're tired of the density and the growth, to calling up their city officials and folks and complaining about the affordability and just how expensive it is. That's an education opportunity for us. It's an education opportunity for everybody on this call, quite frankly. And as we meet with planning commissioners and town councils and mayor and board, aldermen, we try to take a more consultative approach with them. They're used to being beat up day in and day out, whether it be from um, us trying to get new projects kicked off, or some of their constituents who've only lived there 60 months and want to close the gate behind them. So, I don't envy the tough positions they're in, but what we are seeing is um, the last point, which is high prices solve high prices. And when folks who have lived in a community for 30, 40, 50 years can't afford to retire in that community, they can't afford to downsize and stay in that town because the supply for senior housing or smaller units just doesn't exist. And they're having to have a multi-generational home because of that. They're having to have their kids and their kids' kids move in, or the mother-in-law suite becomes more and more of a trend. Um, that's affecting change, and so we're hearing this as we're having more and more conversations with elected officials throughout the mid-state, and even all the way to the legislature. Affordability remains a top focus. Um, Even in the new administration in Washington, there's a big focus, as you all know, on affordability and what that might look like moving forward. So, as we look to the year ahead, um, we would say that the outlook is relatively optimistic for Nashville as we continue to talk with landowners throughout the mid-state, and we're working with families who have land holdings. I mean, one of the unique attributes of Nashville and our MSA is our land holding is largely private. We think that will evolve over time and become more kind of investor controlled. But for the time being, and probably for the next several years, it's privately held. And we're starting to see some, shall we say, evolution toward pricing expectations being more real. The run up of 20 and 21 and into 22 was, by today's standards, prohibitively high. The rate hike really affected everybody in many ways. And it's now affected a lot of landowners to understand that um, they may not receive what they were, or it may be done in a different way. And so we're enjoying those conversations, and we look forward to continuing conversations with each of you as you think through your 2025, 2026, and 2027 goals for growth here in Nashville. So, without any further ado, just want to say thank you again for the gift of your time and attention. You can always reach us at the numbers there on the screen or via email. So, thanks again, and we hope you have a great rest of your day. Reach out. Talk soon.
Talk soon.